That's right. So Nestle is looking good, Vinny. And of course, even Tata Consumer Products has reported a pretty solid set of numbers. So what's the future looking like for consumer goods companies is the question. And is the worst behind them from the pressure of high input costs? Let's discuss this with Kaustubh Pawaskar, Senior Research Analyst for the FMCG sector at Sharekhan. And joining him is Akshay D'Souza, Chief of Growth and Insights at Bizom. Great to have you both with us. Kaustubh, first to you. Over the last 12 months, I was seeing the FMCG sector, how it's outperformed the broader markets, and the FMCG index has outperformed the Nifty 50 as well by as much as 20%. What do you think are the factors that are working for this consumer goods pack right now?
See, two important factors what are working for the consumer goods sector is the resilient demand in the urban markets. So as we have heard that rural demand has consistently remained under pressure because of the inflationary environment what we have seen. Urban demand has remained quite resilient, and that is mainly because of the fact that out of home consumption, which was saw a decline during the COVID times, it has started seeing an improvement from Q4 of FY 2022, and that has helped urban demand to to be little ahead of the rural demand. Also, another important factor for the FMCG companies is the penetration-led growth. So we have seen most of these companies are penetrating deep into the rural market and also focusing on expanding their direct and overall distribution reach. So that is also helping this companies to gain both in terms of the penetration as well as in terms of the market share. So I guess these are some of the important factors which is helping FMCG companies to post good growth. Obviously, for past 3 to 4 quarters, whatever growth we have seen for the FMCG companies, it is largely a price-led growth with volumes remaining muted. But I believe that the growth what these companies have achieved, some of the companies' growth has been much better than the overall the category industry growth. And the market share gain, as I said, market share gain, product mix improvement, new product traction to the new product launches. These are some of the factors which are helping FMCG companies to do well in this uncertain environment in terms of revenues. In terms of margins, I believe that the pressure.
Fair enough. Yes, go ahead. No, what were you saying?
Yeah, so in terms of margins, what I would like to say is that I guess worst is behind. We have seen commodity prices correcting.
Correct.
And we should expect things to improve over the
but
period
like
of time.
You were saying, these price increases perhaps have helped their cause. We haven't seen that much of an increase in volumes. Let's understand this from Akshay as well. Akshay, what has been the impact of high inflation, the rising crude oil prices on the FMCG sector? Because you'd see the product mix, you'd see their pricing strategies having changed because of these macroeconomic issues. How much of a play has that been?
Sure. Thanks, Vikram. So firstly, I think at the start of 2023, one of the most important factors we thought that will affect consumption will be the drop in food inflation globally. And this is, I think one of the important things to realize is inflation is not just linked to what we have in India, but also to a global economy, which is where we are at. So that is linked to another very strong factor in India. One is very strong agri-led economy also. So we are able to create supply, especially in India, created a lot of supply of wheat in the domestic market, if you remember, by creating export constraints over there. So that helped. That has also helped for rice. So you actually ensured that there was adequate supply. Two is a strong rupee also helped prevent an excessively inflationary environment compared to other parts of the world in India. And this year, when we actually seeing that supply is very strong globally for most of these commodities, India stands to benefit far more. First of all, we were relatively stable from a global economy standpoint from a food inflation, and that is only going to get better over a period of time. Now, what that means is definitely better margins. However, there is one very important factor playing out today in Indian FMCG, which is the competitive landscape in India is changing. And the intensity, especially in FMCG, is increasing with a lot of these big players coming in, right? So you have the Reliance Retail coming in a big way. You have a lot of other players who are in the traditional commodity space now coming up in the branded space, in packaged goods and all of that.
Yes.
So I think the competitive intensity is going to go up for sure.
Yes, certainly. Akshay, I'll come to the competitive landscape in a moment. But Kaustubh, do you think this correction in raw material prices is going to hold out and we will see margins strengthening further for consumer goods companies? If so, which companies within the FMCG pack do you believe this possibility is the strongest with?
Certainly, see, if we look into the crude prices or crude derivative prices last in quarter four FY 2022, in the second half, we have seen crude prices going up significantly because of the Russia-Ukraine war situation. And then it significantly moved up in quarter one of FY 2023. Now it has come down substantially from those highs, and it is trading at around 85, 80 odd levels. So I think decline in the crude prices. We have seen edible oil prices also coming down from their highs. Also, barring the some of the agri commodity and milk prices, I think other commodity prices have started seeing a declining trend because of the supply improving. So I think that benefit would start coming in from quarter one of FY 2023. However, we need to wait and watch how the supply situation is in the coming months. If prices continues to fall, I think the margin benefit would continue to sustain in the quarters ahead, and that will help FMCG companies to regain their focus back on recovering their volumes, because we have seen in quarter four and that some of the companies already passing on the commodity correction benefit to the customer in the form of price reduction in categories like soaps, detergents, or even the edible oil. We have seen price correction.
Yes.
So if commodity prices continues to correct ahead, I think the focus would remain on improving their volume growth in the quarters ahead. And also monsoon will play a key role. So if monsoons are good, agri income is good, kharif crop is good, I think we will also see some bit of improvement in the rural demand,
Yes.
which might act as another key factor.
But picking on that point about cost pressures, in the past, Akshay, to tackle input cost pressures, these companies, they went in for price hikes. I'm wondering how much that helped them, and how you think now they're going to try and formulate their pricing strategies like Kaustubh is suggesting. Do you see these reductions in prices coming, or perhaps a gradual increase in grammage, offering more for less to consumers? Do you think that they're going to go in for that?
Yeah, so look, I think if you look at the whole of last financial year, a large majority of that financial year was price-led growth for FMCG. There was very limited consumption-led growth that you saw last year. This year, however, is a different story. You are actually seeing input costs going down tangibly, right? And coupled with the whole competitive intensity increasing, companies have no choice but to pass on benefits to consumers. Now, passing on benefits on higher value packs is very, very easy compared to what it is to a established price point. Because where you have, especially in categories like beverages, in packaged chips, for example, some of these price points are very established. At that point, you need to retain the price point. And that will only alter, grammages will only alter if the competitive intensity has changed there. That being the case, we are also seeing a slight shift now. I mean, this is the latest that we have seen. There is a move that we are seeing towards premiumization.
Yes.
And we are seeing post-inflation, we are seeing for the first time, I think 4 of the 6 categories that we're tracking are now seeing a shift towards higher value packs, which is a significant shift because that also indicates that there is going to be a consumption-led growth in the offing for the days ahead. And that's a major shift that you're actually seeing now.
Correct. But Akshay, now these companies, like you said, like Reliance, like Amul, they're coming in strong. They're challenging the incumbents like HUL, Britannia, even an ITC in several categories that these incumbents have been very strong in, like home and personal care or cookies and staples. How is the competitive landscape, like you were saying, changing in the FMCG sector, and how is that going to affect profitability for these companies now, going ahead from here?
Sure. So I think essentially you'll have to look at 3 elements, right? I think there is a supply side, because these guys have deep pockets and they are large enough, they should be able to manage supply constraints and benefits of a global economy on their cost side. The other key aspect there in the FMCG business obviously is brand building definitely to build consumer demand, which is the other important aspect. And the more critical part from an India standpoint, because we have such a diverse retail kirana universe across the country, is distribution. Most brands today who are doing well, the guys like Nestle, the guys like Tata Consumer, are all doing well on the strength of an increase in the distribution that they are doing. And this direct distribution ends up being the secret sauce for most of these companies. As long as the new challengers can actually build distribution, then they can create a deeper impact, driven by a strong brand that they can create. So that's the real key.
Yes.
And it's not going to happen overnight. It's going to take a while to build that.
It will take a while. But the cola wars are here. They're happening now. It happens every summer, Kaustubh. They're always top of mind in the summer. So who's winning those? Because the large expectation has been that Reliance is going to spark off this price war with Campa Cola. Do you see that coming? Is it happening now? Where are the pressures building up for the incumbents within the cola universe?
See, in the cola universe, we have already seen player like Varun Beverages. It is now commanding almost 90% of PepsiCo's India business. So, as Mr. Akshay said, that distribution is playing an important role for these companies. Varun, in past 5 years, they have built up their scale in India, and obviously they are tapping new markets under the PepsiCo belt. So they are now commanding around 90% of PepsiCo's India business. They have penetrating deep into the southern market. Still, that market is quite big for them. They are looking at expanding into pockets into this market. So I think they have that capability to expand. And PepsiCo has Varun has a market share in the Indian markets, domestic market. So obviously Reliance acquiring Campa Cola's this thing, obviously it will act as a competition, but it is not going to immediately impact the sale or compared to the player like Varun has already has a established base into the Indian market. And also, as I said, innovation acts an important role. So even all these players are adding new products into their portfolio, which will definitely act as one of the important a factor from the competition point of view, because innovation is helping most of these companies to gain market share. Yes. So I believe that strategy will continue along with the distribution expansion for most of the consumer good companies.
But talking about innovation, but Kaustubh, when you talk about innovation, you need innovation in marketing as well, and that's something that FMCG plays bank a lot on. So how are marketing spreads looking, Akshay? These strategies, how are they panning out? What are the shifts that you're noticing? Because as soon as the pressure of high commodity prices weans itself away, capturing the fancy of consumers is the real go-to for FMCG companies, isn't it? I mean, how much investments are you seeing now in brand building, and how is it changing that universe?
No, I think we are actually at the ideal time of the year when brands put in very, very high decibel campaigns. You have a very hot summer at the moment in the country. At the same time, you have India's favorite obsession, which is cricket, happening at the same time. This is ideal fodder for very, very heavy media spends. And especially in the beverage category and the cola wars, this is critical season. Like you said, March to June is where almost 50 to 60% of the sales happen. So winning it in these 4 months becomes critical. Now, for challengers like that we talked about earlier, this first year may not be enough, because you'll have to kind of still build supply, build distribution, and brand building doesn't happen that as quickly as you would like it to. So I think it may take longer than that. But if at all there is ever the season to win, this is one of them, and followed by this will be the festival season that will come later in the year. So you are definitely seeing a high decibel media spends happening, and I think brands are actually going all out to kind of as inflation also is dropping, to woo consumers towards their brand. And I definitely feel that this is going to be the year of consumption-led growth after having had a price-led growth last year.
It's going to be consumption-led growth for the FMCG sector. Kaustubh, if you look at the entire FMCG play from an investor perspective, which are the companies that are looking the strongest from the kind of returns that they could get for investors?
See, some of the companies, didn't perform well, on the broader, from the broader market terms. So, for example, Godrej Consumer Products, I believe that this company will now do well because of, the recovery in the household insecticide business, what they're expected to see, and also their Indonesia business is expected to do well after a lull of 2 years. So that is a key factor for Godrej Consumer Products. Varun Beverages, purely on the basis of the fact that, as I said, distribution expansion, and this year summers are going to be quite harsh. So they are expecting strong volume growth, in this summer season. So that will act well for the Varun Beverages. Company like Jyoti Laboratories. Again, we believe that it's a small, pack in the this large FMCG basket, but expected to do well, consistent performance for past 3 to 4 quarters in terms of double-digit revenue growth and margin expansion. I believe that one of the stock which will do well. Mrs. Bectors and Food, again a story on the distribution expansion, where it is focusing on expanding its biscuit and braids business in the Indian market. So these are some of the stocks I think we believe in the FMCG pack would do well in terms of fundamentals and also in terms of valuation. And the another in the large cap, what we like is ITC because of its discounted valuation, and we have seen for last 3 quarters ITC performing well. Its cigarette business, FMCG and hotel business will continue to do well, and that will clearly help it to be one of the better performance in the FMCG pack. So again, ITC is our pick in the large cap FMCG space.
Well, it started out by us looking at the kind of numbers being posted by Nestle and Tata Consumer Products, and it seems like a trend is building up where the pressures, input cost pressures, now those seem to be waning away. We're seeing a softening of commodity prices, on the back of which now are we going to see improved margins, and that's the starting point of the discussion. Both our experts seem to think it is in the making, but of course it is going to take its time as well. Akshay and Kaustubh, many thanks for joining us with your perspective on this discussion here on India Tonight. Then we are changing focus to the automotive